Hello everyone, welcome to your daily dose of dividend. Today we're gonna do a quick analysis of Philip Morris. It's a market cap of $148 billion, a stock price of $95.93, and they are in the tobacco industry. If we look back 10 years, we can see that this had drastically underperformed the S&P 500, and this is with dividends reinvested. So even high-yielding stocks can, of course, underperform the S&P 500 with its dividends reinvested. Now for some fundamental data over a 5-year period. Sales growth 3.3%, earnings growth 5.4%, the estimates forward for earnings 2.3%, return of capital is a bit high though, 36%, which is nice. The debt to free cash flow is also okay, 2.48, but they are not buying back any shares. And for the dividend data, a nice yield of 5.2%, a high payout ratio of over 87%, a low growth rate of 3.75%, but nice growth years of 13 years. That makes up for 4 out of 10 points, which is not too good. If we look at gurufocus.com, we can see that they have a fair value at about $89, and they rate it as fairly valued right now. But let us do a deeper dive into the valuation in the help of fast graphs. So here we have Philip Morris. If we begin to look at the earnings, we can see that it's a bit up and down. And actually it's not growing that fast, annual rate of only 5% compared to the S&P 500, which is about 9%. But yeah, the yield is quite high though, 5.2%. After that, we can check if the cash is actually covering the yield, and then we can switch to the free cash flow and we can put in the dividend. And here we can see that they are raising the dividend, but yeah, it has been a bit less now lately. And actually during 2017, they didn't cover the dividend. And it's very marginal that they are covering their dividend with their cash. So they don't have that much room to increase their dividend. If we swap back to earnings and we also take the price in consideration, we can see that it's a bit cyclical. Here it got way overvalued and now it's come down. Yeah, now it's trading about fair value, I would say. And if we project out to late 2024, the analysts expect an annual rate of return of about 6%, which isn't too great. So maybe instead of Philip Morris, you might want to take a closer look on, for example, Altria Group, which is a bit undervalued right now, if you believe the analysts. And here you can instead have a projected annual return rate of 34%. That was it for Philip Morris. I hope you guys liked it. Please leave a comment what you think about Philip Morris in the comments below, and also like and subscribe. See you next time. Bye.